Hey guys, it's Will. I'm going to go through the markets again. We're in a bit of a rough patch, obviously, but if you look at my videos that I've been doing for a few weeks at least, I've sort of indicated the downtrend and that I wouldn't be getting in, and so hopefully that's been helpful. But I like to just share kind of my perspective on things, so you can see, I've been somewhat consistent in looking at what's happening, and so I use a variety of things with the charts, and if we just go through these IWM, like we had these points of support in the past, but it's been in a pretty choppy period, but there's like a low point here of support. But I mean, it was just oscillating, a bit of a wedge here. It broke through and then came back, instantly reversed. But then we got below the 50 and the 50s crossed below the 200 and it's sloping down. But when I look at the price percent oscillator, the momentum, once we cross down below the zero line, it's a pretty bad sign. So even though you see these little reversals here, they bounce down either off the 200 or the 50 and then continue. So if you're going to buy inverse ETFs, it's a good time when they first bounce off that 50. So like basically this candle here, you see how it just came back down. Some people use the 8 EMA, and you can see how we're not closing above it at all. So when you close above the 8 EMA, you can have a little bit of a bounce, but especially if there's resistance like 50 or 200-day moving averages, it may not go up very much. So I wouldn't be getting involved. This is downward sloping momentum as well. Some people try to buy, they see a nice big candle and they get excited one day, but you can see how it's just never progressing. So there's red volatility stops. They also kind of indicate an uptrend or a downtrend. They might be short-lived, like here, if you have a lot of overhead resistance, but this one's not a great one. But yeah, it's just a continuous downtrend. So with my methodology, I've been waiting for an uptrend with established higher lows, and so I wouldn't be buying that. The Dow, oh yeah, the other thing I think, well, yeah, that broke through that support as well, which is not a good sign. The Dow is right about at that support, you can see, but again, it went up a bit and then come back down, and now it's this is pre-market, so you never know what's going to happen, but we're right at that support point from the past here. But this trend, the momentum is down. When it gets down like this, it can tend to reverse for a period of time. But we're not seeing anything right now. But it's right close to the support point, which could break down. But I look for things like this, in an uptrend with the green volatility stops, momentum crossing up above zero, and that's the scenario I'm looking for. And so let's look at the S&P 500. So we broke down below the 200, had a few, we get an up day or starts out being up, and then this one went way down and pushed way back up. So that could be, some people can think of that as a reversal, but I just look at the momentum going down, the red volatility stops, and I don't just jump right back in. There's a 200-day. So when it failed off the 200, that could be a shorting period, like an inverse ETF period. And the question then is which of these previous support points will hold. We've got one right here that's pretty strong. It depends where you draw the line, if it wicks or not, but you're right around that support, and you're pretty far down below in the momentum. So there will be a reversal. Whether it'll last or not is a question, but usually when the momentum is up, PPO is above the zero line here, you have a good uptrend. When it crosses down below, you're heading down, and now you're down here. So there are reversal points coming, but this is not looking great in terms of where I would get in. Finally, or for American stocks, NASDAQ, same scenario, broke through 200, continually down, fairly steep. So this is like an emotional parabolic kind of drop. So there will be a reversal at some point. We're down pretty far below the momentum here. PPO. But I don't try to buy these little things when there's like a one green candle or anything. I look at uptrends. I want to see like this where it breaks up, and then you establish a new higher low right there, and then ideally like you get up above the 0 and even the 50-day. So this would be kind of a period of where I would get in things like this as well, above the 0 line, a nice uptrend with green volatility stops. That's kind of the area I'm looking for. I'm look at the Canadian markets. Pretty volatile. You can see big candles up and down, so it's not great for trying to swing trade in momentum, which is kind of what I do. And we're below the 50, which is curved down, and this momentum is heading downward. So all that looks pretty bad. So there's not much you can do with that unless you want to get into the inverse ETFs. There's SH for the S&P 500. There's RWM for the IWM. If you want to get TC2000, which is what I'm using, you can check out the link in the description. You'll get a free trial or $25 off purchase. I've got the gold plan with US real-time data. So right now I'm seeing pre-market data, so I can see what's happening with the markets. Things reverse quite, from pre-market it'll be down, and it'll go up during the day, then it'll go down in the afternoon. So their swings are pretty volatile right now. If you look at the volatility index, the VIX here, you see these spikes. This is when things when you're up here, the markets are quite volatile. So it's not really a great time to be doing like swing trade type stuff. So then what I do is I go to my sector ETFs for US or Canada, and I do a screen. So I'm trying to find things that are above the 50 in an uptrend, and you can see corn. Momentum is sloping up as well. Corn, soybeans. So there are things, there's a big down slope, but then it broke through. Right around here, you can see you've got a higher lows established. So you want to see that break of a downtrend and a break. Like here you had a break, but then you don't have a higher low, you just have an up, and it hits the 200 and comes back down. So you want to start to see that higher low action and then move into the trade on an uptrend. But like I said, everything's so volatile right now. Brazil, there's been a big downtrend. It broke up above the 200. So you see I put an arrow here right when it gets, the PPO, price percent oscillator, gets above 0 and the higher low is established. So that's a good entry point. You've got the 200-day above here and all sorts of previous resistance from the downtrend. But you are breaking that big downtrend slope here. So this is kind of what I'm looking for after a downtrend, would be things like that. So yeah, commodity type stuff is doing well. And so obviously, like an earlier entry would have been good. Once you got above 0, it's usually around the 50-day. And then you see a pullback and then another up candle. So you could have got in there, but you're getting up a good trend here. So this is kind of ideally what I'm looking for in terms of swing trades, just holding them for even weeks and just following that up, on an uptrend. You can draw a line and just follow that trend, or you can use the ADMA or these green volatility stops and just try to, like this, you ride that up. It stays above the green volatility stop till right about there, so you can get kind of a swing there. So there's not really much, great stuff to get into. In Canada, there's the energy. Let's take a look at the American, the American energy. I think because the slope is a little bit down, it's not showing me this one in this screen, but it's above the 50, and it is in an uptrend. So we'll see what happens right around here. If we get a boost with an update, it'll probably turn around to a positive slope. But this is above the 0 line, so this one is good. It's just not showing up because I have a slope. I also want to see an up slope of the price percent oscillator. So like right here would have been a great time to buy because you've broken up above 0 and the 50-day moving average, and you could ride that up to here and you probably would have sold there. I would skip this momentum stuff down here, and then you get back in. So you kind of avoid the down slope and the negative below zero momentum stuff, and then you get in when you start to see that swing again. And usually, hopefully it's above the 50. But in Canada, there's only the oil, and then there's this platinum palladium. And you can see, like, once we broke up above zero, that was right about at the 50. And of course, you know, if you're going to do a trade, you see the 200 here, it's probably a good time as you get close to that to potentially close out the trade, just to use that. And then once you get above the 200 and you have clear sailing, you know, that could be a better chance. You never, you know, there's always past, if you're dealing with past resistance, like people that have lost money during this downtrend, you know, there's points of resistance, like say there, which could come into play when you're doing your trades in terms of the range of where you want to trade from. But other times you get smooth sailing. This stuff can be a little bit volatile, like we see here, this type of like metals and things like that. So if you know, it might not be the best type of thing to get into, but I think that's it. So yeah, if you want to get TC2000, which is what I use, check out the link in the description below. I've also got a link for TradingView. I use that for the crypto stuff. I've done a few videos on crypto. I use TradingView for because they do a lot of good crypto and ratio charts, and also more alerts and more watch lists than they let you use with the free trial, so, or with the free plan. So check out the links below and enjoy. We'll talk to you in the next video.